the value of networking, as coming from a question from someone who's really poor at networking. I'd love to know more about the value of it, and should it be something we should all be doing more?
I think the short answer is yes, we should all be doing more. I think it's been hugely valuable to me over the last 15 plus years, but I was a bit of a reluctant networker. I went to business school in 2008, 2009, and I remember being there, and the deputy dean of the business school came in and on one of the first days and said, look around you at your classmates. This is your network. This is going to be the most valuable thing you will leave this business school with. And I remember thinking, what a load of rubbish. And I was like, I just want to be here for the 3 more letters after my name. I want to get a better CV, get a better job, because I hated my job at the time. But actually, so from that sort of reluctant start, and maybe I was a bit fearful of it as well. I've completely turned that around and have realized that actually, the network and those relationships that you build are unpredictable, but it's just everything.
There's something just going around in my mind quickly now, which is that saying, your network is your net worth.
Yeah, I think that's probably what the deputy principal said at the in the first day of the business school. Yeah, and it is a bit naff, right? So we've all probably been to networking events, or even that word, it is a bit naff, but it is worthwhile. I think of it more as building interesting relationships with interesting people is the way I'd approach it, rather than the naff kind of networking, swapping business cards and all that sort of stuff.
Yeah. So so here we are in 2025, and I think we can both agree that networking is a valuable thing. I'm terrible at it. So if you're trying to explain networking to someone and the value, like even how to approach it, like where do you start, and like what have you started? What have you been doing over these years?
Well, through my own example, which maybe people can take bits of what they find interesting from it. So I started something called 9 Others in 2011 with my co-founder Katie Lewis, and it's extremely simple. And there's a bit of a backstory as to how we got there. But essentially what we've done is we've hosted a dinner for 10 people every month for the last 13 and a half, nearly 14 years this year. And it's yourself and 9 others. So it's deliberately small. It's loosely curated who's there. And, we talk about challenges and try to help each other out. And I think the try to help each other out bit is the best kind of mindset switch that I had to networking. Because, a lot of people go into networking and you're in a big room, there's dozens of other people there and you're chatting to someone and you kind of might get stuck with someone, or, you're talking to someone and they're kind of looking over your shoulder to see if there's anyone more interesting to talk to. And I don't know, I found that a lot of those kind of networking events were for what people could take out of it. They were the takers. Whereas what we try to do with 9 Others and how I would encourage people to approach networking in general is to is that give first, to be default generous and just try to be helpful, try to connect people, try to share interesting things, that kind of default, be a helper. And there's kind of, I don't know, there's pros and cons to every approach, but with that, the result is, you're not gonna capitalize on everything that you get, but I think that's the whole point of it. It's unpredictable. This kind of give first, be helpful. People are going to go away and start interesting things, and they're going to form their own relationships, and you're going to miss out on anything that you've introduced. But that's kind of okay. And I think that's the point, because I think if you keep having that helpful approach, that helpful attitude, it'd be a bit weird if nothing good came back. So I think it's that default helpful up front, and then also just think longer term. I think people think far too short term with networking.
Yeah, because there's possibly a mindset there, which is, what can I get out of this conversation?
Yeah.
And I suppose really what you're saying, it's about thinking about building actual, real, long-term, valued, everything that we think of as a great partnership. That's longer term. I think it's when you're trying to, what can I get out of this immediate conversation? Yeah. It's that
no one likes that, right?
No.
And yet people still do it.
Yeah, no one wants that. So like what you've done there with 9 others is you've set up an event where people can go to the event and they know they're there to network. But I think what often happens is you've got like an event and then it's afters and then there's a few drinks and people are kind of hanging around and it's like, oh, okay, well, it's a bit awkward to be introduced. But what you're doing there is you're setting up a situation where people are going into it to network with the mindset of networking.
Yeah, like I say, it's extremely simple.
Yeah.
And I think I like that simplicity. And there's 1 or 2 rules or principles to make it a 9 others dinner, a 9 others event. But I think sometimes people need those kind of that kind of guidance to get the most out of it.
Yeah.
And yeah, I guess people, I don't know, I sort of hesitate when you said people are going there to network.
Okay.
I don't know, you maybe have to ask the guests, but I'm not sure if they are.
Okay.
Because the whole setup of 9 others is to come along and it's mostly founders. And again, there's a backstory to it, which I can go into, but essentially it was like, come along and share what your challenge is. So share with the question we always ask is what's keeping you up at night? So each person going around the dinner table has to share their big challenge at the minute, whatever's keeping them up at night. And then we spend sort of 10, 15 minutes trying to help that person out. So if you're the kind of person that wants to come along and contribute and share a challenge, be a bit vulnerable, and it's confidential around the table, but you got to be a bit vulnerable, share your challenge, then you get the help of the 9 others, and you're gonna leave with an awful lot more than you came with. And so I don't know, maybe the guests will have to correct me if I'm wrong, but I think people are going there to kind of share that challenge and get a different perspective from the other people around the table, more than I'm going here to network. Yeah. I mean, obviously we encourage them to connect with each other afterwards, and I CC everybody, and then they're connected with me and Katie and everyone else, the thousands of people who've been to 9 others. But I would think the primary thing is to try and get some help on a challenge that's bothering them.
Yeah, I understand it. No, I certainly understand it a lot more now. You kind of explained it. You're right. People are going there because as a founder, you've got multiple problems to be solving all the time. But I think that's great in the fact that you're singling it out and saying, what's the one thing that's keeping you up? And of course that can proliferate into a number of things, but then you have some support and guidance from other founders who've possibly been through similar challenges.
And it was just a way of, I mean, some of it's accidental, some of it's, been there since the start. Some of it has just been happy accidents of circumstances at the time. But yeah, we essentially get people who are going to come along and who are going to contribute. We're saying to them, you've got to come along and you've got to help with other people's challenges. Give a view, give an opinion, tell some stories, connect with people who maybe had that challenge before and all that kind of stuff. And I think once you get a room full of, 10 people who are going to contribute, it's great. Whereas I think what Katie and I saw at many of the other networking events that we'd gone to in the year before starting 9 others was people were there just for what they could take out of it. And no one really wins long term at that.
Yeah, and you flipped it on its head, haven't you? You said, we're coming along to discuss a challenge someone's got, but you're all going to have the seat at the table to discuss the challenge that you've got. So everyone gets something, but everyone gives something as well.
Yeah. I know, it's a bit weird at the time, right? Because, I mean, even now, people told us it wouldn't work because in 2011, when we started this, even back in 2011, there were loads of networking events going on, and they were free, and you'd have free beer and pizza, and there'd be more people. And what we were kind of saying with 9 others was, come along to this dinner. You'll only meet 9 other people there. You'll have to pay for it because we put a ticket cost on it, and you have to pay that up front, and that pays for the cost of the dinner. And you've got to work for it. So you've got to share your problem and be vulnerable, and you've got to help the 9 other people out with their problem. So it is a bit of a flip on its head, and people, some people told us that it wouldn't work, but we just sort of felt it was needed, and it was a good thing to do. So we did.
Where did the concept originally come from, and what problem were you looking to solve initially with it?
So in the year before we started 9 others, so throughout 2011, Katie and I worked on an investment readiness project in London. So for London startups looking to raise equity investment, we were both working for separate investors, but there was this program that we were working on, and it was about going out and running, workshops, mentoring, practice pitch sessions, big networking events, all that kind of stuff. We were doing all of that. And as part of that, I came up with the idea of let's do some dinners, some investor dinners, which I was inspired by somebody in the States who, again, it's really, really simple stuff. But if you get 3 or 4 investors who are ready, willing, and able to invest in startups, and then you get 6 or 7 startups who are ready for that kind of investment, and we go to dinner. We get a private room. We put them down a long table. Each founder pitches their startup. There's a bit of Q&A, and then you move on to the next person. So that's kind of what we were doing. So we were already doing these dinners for investors to meet entrepreneurs and for entrepreneurs to meet investors. But what we noticed at the end of all of those dinners was that the entrepreneurs would huddle together in a corner and talk amongst themselves. And it used to really annoy us because we'd got them there to talk to the investors. And it's like you're in the room with the investors and all you're doing is gossiping in the corner with other founders. But then it happened often enough with different groups of people that we finally figured out what was going on. And what was going on was that those founders were, talking to each other about the everyday business of business challenges. And they couldn't talk about those at any other event because they were always in pitch mode. Everything had to be brilliant. Everything's up and to the right, especially when you're in a dinner with investors. But we thought, okay, they're facing the similar kinds of challenges and they're trying to help each other out. So Katie and I thought, right, is there something we can do just for those entrepreneurs? Forget the investors for a bit. We'll get the entrepreneurs together. Can we help them solve those problems? And they were problems of, ordinary business challenges like, money and getting paid and hiring people and firing people and, where do you get this? Where do you get that? Who do you use for this? That kind of trusted answers from someone who's not in your business, but is kind of in your shoes. And that's sort of the nub of where 9 Others came from. And we thought, well, we've done a bunch of dinners. Let's see if we can do a dinner for this lot.
Well, it's so fascinating hearing your story and how it's kind of grown. Because now here we are a lot of years later and you've done, I can't even do the maths quickly enough, hundreds of dinners, in many, many different countries as well. Yeah.
Yeah, we did the first one and we thought, okay, this is our challenge. So would this be a good idea to put on a dinner, talk about challenges, keep it small, all that sort of stuff. So Katie and I put on that dinner, invited a group of people that we knew would challenge us and give us sort of candid feedback. That went quite well. Some things clicked, some things didn't. Some ideas we liked, some ideas we didn't. So we took all that on board at the end of 2011 and then did the first kind of proper 9 Others dinner the following month where people paid for a ticket and came along. And it was great. I mean, people absolutely loved it. And it was difficult because people are sharing, pretty chunky challenges sometimes, but they could do it in a place that they knew they could be vulnerable. There was no, there was no one to pitch to. It's just Chatham House rule, share what you're comfortable sharing. So they kind of liked that. They liked getting the feedback because, there's no one right answer. We've always said there's no hierarchy at 9 Others. So you don't come along and you hear from the font of all knowledge. We're all on the same level. And sometimes someone who's a few months ahead or a few months behind or is just in a completely different sector can give you an amazing perspective. So those sorts of things sat well with us. And we did a few. So we did one in the next month. And in the summer of 2012, it was going quite well. We still had day jobs, so we were running once a month. That sort of felt right. And we saw that the founders who were coming to the dinners were kind of crisscrossing the world. They had staff and customers and connections in other cities all around the world. So then we were kind of thinking, well, what would scale look like for 9 Others? And then we saw that they were going around the world. And we knew we didn't want to do, 20 dinners a night with 50 people at each. We didn't want that kind of scale, but we thought it might work in other cities. We thought there might be people like us in other cities that might want to do it in a similar kind of way. So then we were having this kind of brainstorming session one time in the summer of 2012, and Katie blurted out, all right, well, let's do 12 cities in the next 12 months. And I was like, oh, shit, okay. But because she said it, that struck us as a good target, but a frightening target. But then we did, and we found people who were going to do it in our way, and that's continued. Some are a bit pop up, some come and go, some have been doing it for close to a decade themselves, and yeah, it's been in. I mean, I've lost count now, but I think we've tipped 50 cities. Wow. Yep.
Different languages.
Yeah, all sorts of different places. Different languages, different random places. At the beginning, we made a list. Like, wouldn't it be great to have it in these cities? And of course, we thought of startup hubs, San Francisco being the obvious one, and other interesting places. Berlin, New York, all these interesting cities. But it didn't go that way. It went the way that people took it, rather than where it was obvious. And I think we were in, we'd had a dinner in Papua New Guinea before we had one in San Francisco, because there were people there who were starting businesses, but there was no community. But someone saw what we were doing, and we were introduced to someone over there, and they said, okay, this could be the kind of way to kind of foster the community and drum up support.
When a founder, I always think about entrepreneurs and founders, and they come out with their idea, and it's maybe from their experience or something they've seen as an opportunity. And then very quickly, if they're going to move forward, life gets real very fast. And there's so many things to then start figuring out, whether it's tech development or process, and you need to employ people. Like, the sorts of challenges that are sort of being discussed here, like, I imagine it's incredibly broad across anything that a founder might be. What would you say are the common challenges founders have in those first few years of starting up a business?
I mean, the common ones always kind of fall into three categories, I think. So it's either about money, or it's about people, or it's about how to communicate. So it's like money in and out. So how do you get money in? And that can be, sales, fundraising, taking on debt. It's about getting money in, and then money out. How do you spend wisely? I think if people do get investment, sometimes they're a bit too quick to spend it and grow their team and all that sort of stuff. So you've got to be wise about spending your money. You can last a lot longer if you spend a lot less. And then it's about people in and out. So we've had, how to find and attract and retain the right people, but then also how to filter through and, get rid of the people that aren't working out. So that's been pretty interesting. And then, the last one is often about how to communicate, which is, sales, marketing, things like that. And I think if you can get the how to communicate bit right, then you can solve a lot of the issues with the first two, with the money and with the people. But yeah, it's hugely difficult. But I think generally they would fall into those three categories.
Let's break them down, and it'd be interesting to go into some of those. So with the money situation, obviously you need to raise funds to build a business, and whether that comes from an angel investor, your own private funds, a group of funds, family funds, we're talking about, there's a whole different raft of ways. Like, what ways are you seeing of kind of being able to raise the funds to be able to grow a business in that way? I mean, I imagine you've got so many different types, right?
Yeah, and it's always difficult, right? People kind of sort of say, "Oh, it's not like it was in 2021. There was loads of money around." It wasn't really that easy then either. You've got to have you've got to have the right, the right pitch or the right business for the right investor. There's lots of investors out there. There's equity investors. There's debt. There's grant funding still probably. So you've got to target the right people in the right way, which kind of goes back to the comms bit. So it's about knowing who you're going for and why you're going for them and what you want from them and what you can give them.
What does a good investment pitch look like? Like you come back to communication being the critical piece. So the first step is getting the right audience. The sounds of things.
So I do some angel investing, and I have done over the years. And again, there's no one right approach, but there are things that I look for that tick a lot of boxes for me.
Go on.
And what makes a good investment pitch? It's short. It's really, really simple, because anybody can complicate things, but to get across something really, really simply, is the best approach.
So with it being short,
Yeah.
you're kind of saying like get to the point quickly.
Yeah.
And then that allows you to have more time for Q&A, because surely if the investor's interested, they're going to have a lot of questions.
Yes,
And
you want to. Far too many founders try to throw the kitchen sink at their investment deck, thinking they've got to preempt every single question and tell the whole story in 10 slides. And my view is always actually just think of your real objective. Investors are busy; they see a lot. So what's actually your real objective if you're pitching to an investor? And it could be for them to hit reply on an email. And if you're throwing the kitchen sink at it and it's a bit complicated and it takes them a minute to sort of figure out what you actually do, they're just going to move on. But if you can communicate it in such a simple way in 4 slides or 5 slides, and that the objective is for them to hit reply and say, let's get a coffee, that doesn't need the kitchen sink thrown at it.
So short and sweet, really, to try and because your objective is to get the meeting. At that point, you're trying to get a meeting. So
at that point, yeah, you're trying to get a meeting, right? You're talking to lots of people, and you're trying to, this investor that you're targeting, you're trying to get them to turn around and say, okay, let's meet. I want to find out more. And I've just seen far too many people throw far too much at it. It just becomes a bit overwhelming, and they don't think about it from the investor's point of view, and it doesn't go anywhere. It's too much.
Yeah, I can imagine the entrepreneur just thinking, well, I need to have all the answers. I need to get I need to get the deck written. Yeah. Maybe, I think maybe there's a point where you do need all of the answers in the deck written for your own sanity and the fact that you've planned your business. But then the way that you communicate that is a far shorter version of that to a investor.
Yeah, it's not a one-hit thing either.
Exactly. It's you're building a relationship again. If we come back to the network,
building a relationship, of course you are. And actually, that's what you want as a founder as well. Because if you go, if a founder puts absolutely everything in the deck, sends it to an investor, and the investor turns around and says, "Great, I want to invest. Here's my money," that you don't know whether that's going to be a really good investor or not. And the thing with investors, which is different to the people you hire, you can't get rid of them. If they buy shares in your company, you can't sack them. And a helpful investor is obviously the best. A close second is a investor that just kind of leaves you alone and doesn't get involved. The worst is like a meddling investor. And if you think, okay, I'm going to send them this pitch, and what I really want is then for them to turn around and give me money as fast as possible, that might not be the best approach. That might not get you the best investors for your business. So you do kind of want to treat it a bit more like a relationship building thing and a longer term thing.
So how important then is it to actually have had a relationship prior to sending that email, to have kind of met them? Like you might have had this idea, but to kind of like them already be in your network. So therefore it's far easier for you to get that meeting, like to almost be networking well ahead of the point where you're going to ask for something.
I mean, that's the dream, right? If founders come along and they should think, right, what would make it really, really easy to get investment? Well, it would be from having lots of, high quality, trusted relationships with the right investors. So go and, build that ahead of time. Again, it's not a one shot thing. And that non-investor relationship is hugely important. I think it's huge. And that's what I try to build, when I'm looking at companies to invest in. I don't do it very quickly. It's really annoying. I mean, I'd love to be able to pick the best founders with the best businesses that'll give the best returns, but I mean, I just can't. So I try to get to know people over a long period of time, have a non-investor relationship with them for a long period of time, and do that with loads of people. And most likely, I'll never invest in all the hundreds and hundreds of founders that I meet. I haven't got that much money, and but they'll get the benefit of 9 others in the community, in the network, and that's all great. But over time, we get to know each other, and I figure out what makes those people tick, and they figure out what makes me tick. And if that's aligned, then great. And that's it kind of makes it a no-brainer. Once you've got that long, trusted, non-investor relationship, you can figure out if it's going to be right. And then they do an investment round. or you have the opportunity to invest later. And again, it's an easy decision because you should already know whether you want to do it or not.
Yeah. So actually, it's about planning ahead, isn't it? Building your network, just building people, connections that you know. So therefore, you already have built like the time. How long do you think typically, like for you knowing someone, do you kind of get into a more serious discussion around, oh, maybe we could go into business together, or maybe there's an investment opportunity here? I mentioned, I don't know how long is a piece of string, but like what we're saying here is that the best situation is not to just be send my email, let's meet on Wednesday, will you invest on Thursday?
Yeah.
It's, you want to build something out that's over a longer
I mean,
period of time.
again, just to emphasize, other investors have different approaches, right? So if you're applying to an accelerator program or a lot of venture capital funds, they are very fast and they will look at your stuff. They will maybe have an application process. They'll get you to fill out a form. They'll know whether it kind of ticks a few boxes. You might get an interview, and then especially with accelerators, very quickly they'll turn around and they'll pull the trigger. So that's their approach. Mine is a little bit different. And how long does it take? I think the quickest I've ever done it is 6 months, but that's like really unusual. The longest has been 7 years. And again, for a lot of different reasons. I mean, so I invested in someone after I'd known them for 7 years, but I mean, that wasn't intentional from the start. That was, I had no money to invest in the start. They were very early, and then they didn't do many investment rounds. So I missed out on a couple of investment rounds when I had no money and they were doing the rounds. But then, 7 years later, they were doing an investment round, but it was really easy. So, I in fact approached them a year before and said, when you do your next investment round, after knowing them for 6 years, I think, when you do your next investment round, I'd love to be part of it. And then a year later, they did the investment round and I was part of it. And it was just easy because I already knew. So it kind of varies, but it varies. And sometimes it's annoying, like I say, it's annoying for me. I'd love to be able to know immediately. But going back to the, why we started 9 Others, when the entrepreneurs were pitching to the investors at our investor dinners, everything was brilliant, right? It's a deck, and it's an investment deck. It's a sales document. You're selling shares in your company. Of course, everything's going to be up and to the right, on the face of it. But we knew, given the huddles afterwards, that everything wasn't always brilliant, and that's just like life in general, right? So I try to figure out what the challenges are. Can we get over them? Can we work together? Or what makes that person tick? What's going to make them motivated to win and be super, super successful? And that for me anyway, that takes a lot of time.
Well, I think the word challenges is interesting because business every single day is a challenge. Mm-hmm. Like there's every part of it is a challenge. Like whatever you're doing sales, you're reaching out to someone, you're trying to deliver the solution that you've promised somebody. Like the whole approach, it's all challenging, and there's problems everywhere. So it's interesting, isn't it, when you're kind of like pitching your businesses, all the way to the top right, everything's rosy, and then the reality is everyone's like, we can't make payment, we can't pay people this month, or this customer's 90 days late and they owe us a lot of money, and how are we going to get the money out of them? Well, they're complaining about the product. Like, actually, you start to unravel the hood, and there's just so much.
But that's okay. That's in every business, right?
That's what I mean. That's business.
Yeah, it is, and that's fine. I just want to understand that before doing anything.
So for someone who's coming to you for investment, where is the line of that? This is the reality, and this is the opportunity. But like, you're trying to work out how much of what you're telling me is true, mm-hmm. and how much is optimism. Mm-hmm. Where's that line on being ambitious, optimistic, and a bit pessimistic at the same time? Like, what would you?
I don't know. It's something it's something that I wrangle with, in my own mind as well for what I want to do. Never mind what some of the companies that I'm dealing with want to do. But I think that word you said, like, what is true? I think seeking the truth is, no matter what it is hugely important. So then you have to, see if that person is self-aware enough and open enough and honest enough to kind of share that truth, no matter what it is. And all the, what I'm doing, the venture capital investing is obviously an outlier business. So you invest in a bunch of companies, most of them fail. One of them will just be so successful it'll make any losses insignificant. In those outlier businesses, there are always weird, unusual, odd things going on. But you just got to discover, what they are. And it's not about one red flag necessarily. It's about building up a picture of, the founder, the company, what they want to do, where their ambition is, where their delusion is, where the truth is. Are they gonna be gritty enough to work hard to achieve that? Are they self-aware enough to know what they should be doing and shouldn't be doing? Are they focused? It's a minefield, but it's brilliant.
Yeah. How do you go about collecting all that information and also validating it? Because sometimes they're going to be proposing something to you in a market that you're not aware of, or you're not. Maybe it's maybe a new market, or maybe they're creating a brand new market. And like, do you focus more where you have the subject matter expertise, or do you think, okay, no, I'm happy to go into a new market, but everything you've just said there is like there's so many things for you to try and get a grasp on, before you make any decisions.
Yeah, I think so. Trying to remember some of the bits that you said there, like comfortable going into a new market. Absolutely, I love new markets, and I love founders that make them and make up their own terminology for that for what that market segment is. That's brilliant. That's really, really good. Because if a founder comes along and pitches, I don't know, I'm going into the $1 trillion podcast market. It's always too big. You're not going to make a dent in that. But if there's a extremely tightly defined market segment niche within that huge market, and that's what they're going after, and that's what they're going to create, and that's what they can dominate, and that's what happens to be growing. Okay, that's a better way of thinking about it. So that's that on the market side, and then on the subject matter expert kind of thing. I just focus on the founder. Again, it's like trying to get to know the founder, and having had dinner with thousands of people for 14 years. You see some patterns, you earn and you learn a lot of intuition. A lot of it is gut feel, and then thinking about it and then trying to figure out what that gut feel means. There's that kind of messy, intuition, inefficiency, all mixed in it.
Yeah. So you're thinking about the founder, what traits are you looking for? What kind of what would be like something you think, because you mentioned intuition there, and some of this is just going to be based on your gut of, maybe this person's got good energy, clearly they're motivated, they're driven, they might have a red flag here. Like, what are you leaning into?
So my 2x2 is high grit and high self-awareness, and that's what I'm looking for. So high grit, you've got to work hard. There's no two ways about it. You got to put the hours in. You got to put the foundations in. In the early days, even with 9 others, right? Even with running one dinner a month with 9 others, Katie and I would, in the early days, meet up in a coffee shop that we knew opened at 5 to 7. We'd both be there by 7, and we'd talk about 9 others for an hour and a half before we went to our respective day jobs. Even for organising, one dinner a month and what we wanted to do with it and what was right and what was not right, we did that for many years. We don't do that anymore, but I think that's important to be able to put the grunt work in, the grit in the beginning. So that matters. And then self-awareness matters, because there's no point in bashing your head against a brick wall. That's just not gonna, at something that's just not gonna work. So you've got to know what you're capable of, what you're not capable of, what you're good at, what you're not good at, what other people can bring, all that kind of stuff.
It's interesting, because what you haven't said there is, I'm looking for this degree or that experience. What you're talking about are both things that actually grit. We can all choose to have grit. We can all choose to show up. So you're actually talking about some fundamentals there, which is, when you're off doing something else, are they going to be there working and doing the thing? Are they going to be focused enough?
Is it congruent to what they want to do? Another investor friend of mine gave a talk, and I think it was like 2017, 2018. It was all about congruence. And ever since then, I've been like, okay, that's interesting. So is it all aligned and congruent with what they're building and why they want to do it. You know, I'm not here to convince someone to do it one way or another, but it's got to be, you know, they've got to be congruent with that grit. Like when I finished business school, I quit my job because it was so horrible, and I spent a lot of months throughout 2010 trying all sorts of things. You know, I was trying to import electronics from China. I was trying to export bed sheets to Kenya. You know, I was thinking about having a coffee shop. I was thinking about having a shop that sold weird cereal, loads of different stuff. And we were thinking, me and a couple of friends from business school, just to kind of illustrate the point, me and a couple of friends from business school were thinking about importing coffee from Kenya, roasting it here and selling it. And we all thought this was a good idea. And we all said that we wanted to do it. And we even put some money in it. So everybody went to the cash machine and withdrew some money, and for some reason gave it to me. So I would look after the money that the other two and me would contribute. And it sat on my shelf in my office for months, and we didn't do anything. And like that's obviously, you know, a massive signal to, no matter how brilliant importing coffee from Kenya and roasting it here, however brilliant that is as an idea, it just wasn't congruent with what we wanted to do. And the evidence was there because we didn't get off our backsides and do it. Whereas with 9 Others, my God, I mean, I had to get up at, you know, gone 5 a.m, get myself sorted, get into London and meet Katie extremely early in the morning to talk about 9 Others before going to a full-time day job, and then probably going to networking events in the evening. And I think that revealed that 9 Others was a thing that I wanted to do.
Yeah, because you naturally found yourself doing it.
Yeah.
And also you're prepared to get up early, put it in the diary, meet with Katie, your co-founder, to discuss it at length and keep going. That's that coming back to the consistency of like you're showing up. Yeah. It's something that you truly want to happen.
Yeah.
To make happen. Yeah.
So that's what I try and look for. Is this founder doing the grit bit? Because that's the problem that they really want to solve. That's the thing they really, really want to do. You know, a lot of people come up with the idea and almost kind of want permission from someone else to do it, and then they think they'll put the work in. Where you kind of want to see, a bit of grit first, because then they'll do it regardless of what anyone else thinks.
Yeah. And then the other one is self-awareness.
Yeah,
self-awareness is an interesting one, isn't it? Because you're kind of you're looking for the truth. Mm-hmm. But you're also kind of looking for them to almost be like, think about when we do like reviews of accounts or deal reviews, and you have like a SWOT analysis, risks, opportunities, risk, those sorts of things. And that self-awareness is to go, right, I know that I have these risks, but I'm going to try and proactively mitigate them. For example, like self-awareness, how does someone, what are you looking for in that self-awareness? It's kind of like I'm trying to think of it as like a balanced view of the situation.
Yeah. Well, I think there's a couple of types in my definition of low self-awareness.
Yeah. Okay.
And one is the what I call the X factor type. Whereas if someone's got all the grit in the world, right, they're on the X factor, they're in front of the judges, and they want to be a pop star like nothing else. They've got all the grit in the world, but they're completely tone deaf. They just can't sing. And we've all seen those people on TV. That's like really low self-awareness, right? So you've got all the grit in the world, but it doesn't matter because you're not aware that that's not the thing that you're good at. That's not your unique talent in the world, because you're completely tone deaf. So no matter how much grit you put into that, with that low self-awareness, you're not going to be successful. So you've got to look out for that X factor type. The other type is if you don't quite know how good you are. So I think there's a lot of people around who want to work hard, they've got the grit and all the rest of it, but their kind of low self-awareness is that actually they don't, I don't know, maybe it's a confidence thing, and I've been through this as well. You kind of have the worry, you kind of want the approval and all that sort of stuff. So you're a bit held back, and you don't quite know that how good you are. And again, I suppose I've only just thought of it now, but thinking about the X Factor one, you can see these people on the X Factor as well, because they come on and they're very timid, they're very nervous, and they're like, oh my God, I'm going to be hopeless. And then they just knock it out of the park and they're incredible. That's also low self-awareness.
Yeah, so that low self, they might be talented, but you're thinking, oh, are they doing this for approval or external validation? What are they trying to prove? But for you, that would turn you off as an investor.
Not necessarily. I think that kind of self-awareness can be changed.
Yeah.
You can be made aware of, actually, you know what, you are really talented, and I think with the right people around you and the right support and the right team and the right encouragement, that can be shifted.
Yeah. Okay. So once you've found the right investment, what does the journey look like from there? Because you described the different types of investor earlier. Someone who, invests and stands away. Someone kind of who gets really involved in the business. Where would you say is your preference or
For
style?
me, I try not to get in the way.
So I didn't mean to get in the way.
Yeah, no, I know it's true. I don't. I do try not to. What do I do? I'm always available.
Yeah.
So if I invest in a company, I'm like, if I'm awake, I'm here, I'm online, I'm available. I don't care what time it is, because I don't bother with board seats or anything like that. If they've even got a board, and I've done that before, but the board is not where these challenges come up. It's on a Sunday night over WhatsApp, or it's in amongst all sorts of other things that are going on. So yeah, I try to be available, and I mean, mainly I just try to help the founders think. Again, I'm not here to convince anybody of one approach, because it's got to be the right approach to them. It's got to be what's congruent to them. But if I can help them think that through by asking a few questions and telling a few stories and helping them think about it, then I'm here to do that. So yeah, I never want to get in the way, but I wanted help if I can, obviously. And sometimes that's, again, with the board thing, it's not once a month I'll be helpful at equal measure at each board meeting. I might do nothing for 6 months or more, and then all of a sudden, one insight or one introduction or one story or one something else can make a huge difference.
It's interesting because I've sat in quite a number of board meetings over the years, looking at the revenue projections and looking at where the business needs to go. And it's interesting because I always feel like the real meeting isn't that meeting. The real meeting is the meeting we had at lunch or breakfast or something before, or actually it happened of that deal didn't close. What does that mean for our EBITDA? Yeah. And yeah, you're delivering a narrative of what the numbers are, but actually...
And that's fine, right? So board meetings are often decision-making, big decision-making meetings, and that's great. But I think I can be more helpful before and after that.
That's what I mean. It's like the psychology of the group versus the psychology of people one-on-one. When you're one-on-one, you can open up, you can be honest, and this didn't quite work. We're trying to go in a different direction now. But in the board meeting, people are trying to often project sort of the best, the most optimistic view quite often, which is great. But it's often I've sort of sat there before and gone, well, that's not true.
Well, that's why, that again, going back to the non-investor relationship, that's why I want a long, trusted non-investor relationship with lots of people beforehand, because I've seen and talked to other investors, and I know that they don't get the truth because they've gone into that investor relationship far too quickly. Because as soon as money gets involved, it changes things
completely.
And it does with me, and that's fine. But I want to try and have as long a non-investor relationship with the founder beforehand, because if you jump in too quickly and there's money involved, it's all great, everyone's very excited, but then you think it's sometimes the not so great founders or not so great investors think, well, that's how it's always going to be, and then a few months later you're just not getting the truth, you're not getting the problems, and it's a slippery slope, and it never works out.
So you actually actively encouraging to hear about the problems, because like a lot of investors...
Yeah. Well, I've spent 14 years encouraging people to share their problems. So yeah, definitely.
Yeah, because that's where the hub of business is really, is in solving these complex problems, because that's what a business is, what the purpose of a business is. So therefore you're going to have problems and challenges. And it's interesting because quite often I feel like I see people get into these situations where you're talking positively about the business, talking positively about the numbers, and it's like, okay, but the reality is it's something very different to that. And that's where it comes back to the self-awareness piece of just, because what we wouldn't want is for you as an investor to then suddenly lose confidence in the founder, and then you're kind of like, because like I don't know, when you lose confidence in someone, it's very hard to bring that back.
Yeah, I guess it is. And I think that's why it's it's good to get to know people thoroughly as much as you can beforehand, and just sort of set the rules of the game, and all that number stuff at the board meeting and having a CFO and everything. That's super important, but that's not my skill set. So they can go and find someone else to do that. But yeah, talking about challenges, I can probably do that. And I wrote about this as well. And I got a pitch a few weeks ago from a business, and it was all obviously as a pitch deck does. It all looks really good, really rosy, and everything was all lined up. And I don't know, it just kind of, there's something churning over in my mind that wasn't quite right. And it was just that all of those things had to happen exactly as it was laid out for this to be successful. But if you're involved in business, the super successes can take many years. So the likelihood of everything going to plan for many years is zero. So it was like, this business is not built in a way that is robust, or it's not gonna outlast those problems. And that was something really, I don't know. I liked having that kind of click in my head when I was looking at that. It all looked really, really good, but it just didn't make sense. And then it dawned on me that it's not built to outlast.
And was that just like a level of intuition, or just a feeling that you had, which was just something that's just not been thought about, not quite right here?
Well, it's a feeling that I had. So it's like reading the materials and looking through, and it all looks good. But then, I don't know, something in my gut just said it just wasn't right. It was not right for me anyway. Just something didn't sit right. And I didn't know what that was. So it took sometimes takes a few minutes, sometimes takes a few days or weeks to figure out what that gut intuition is. And then you can put it into words and say, that's what it is. So I think it's important to trust that gut, but you've got to figure out and have a mechanism to figure out what it's telling you.
I think so. If we go back to, I'm just trying to think about how you that feeling, that gut instinct you've had is based on many years in business, seeing things that have worked, seeing things that haven't worked. How did you build your career? So I know we talked about going to business school earlier, and then we kind of mentioned about that your fellow people in that school would become your network, your net worth, potentially.
Which they have, actually. I'm still friends with those people many times later, and they're wonderful. I was just a bit of a skeptic at the time.
Yeah. And then you started importing, you had these ideas around coffee and cereal. And so what business sort of grew for you?
Career-wise, I mean, the kind of longish story is, I didn't work very hard at school. I had a great time. It was lots of fun. I enjoyed it, but I didn't work very hard. So I got the results that I deserved. So I left school with 2 crap A levels. I tried to go to a college, but it didn't really work out. So I kind of bummed around for a bit. I worked for John Lewis for a bit because they had this management training program that I could get onto with 2 crappy A levels. And I think that was pretty good. That was a good grounding. It made me, show up early and things like that. So I was with them for a bit, but there must have been, it's easy looking back, but there must have been some sort of entrepreneurial spirit or drive in me, because when I was at school, I was always hustling, trying to make some extra money on the side. And then I left John Lewis to start a t-shirt company. So I did that for a year or so, which was really interesting, lots of lessons. And then that wasn't working out brilliantly. It was a long slog. So I kind of went back into retail, not knowing what I wanted to do. And then a friend of mine was working in an IT department of RBS, and they were hiring anybody and everybody because it was Y2K, right? So it was 1999, the world was going to explode. So they were hiring anybody and everybody. So I persuaded my friend to get me a job interview, which I did. And then, it was a non-technical role, even though it was in the IT department. It was kind of like a coordination role between the different departments of that bit of RBS. But I managed, I promised the guy who was interviewing me that I would show up early and I would work hard. So he took a chance on me, which was amazing. sometimes a couple of these things happen, and then I loved it. It was great. I went to work for them, and I was with them for about 4 years. Our bit of RBS was taken over by the Bank of New York, so I was working for the Bank of New York and moved into consulting roles, facing off to clients, talking to the techies, within the company, learning on the job a bit more of the tech side of things, and enjoyed that. Progressed well, worked with a really, really good team, and then all the better consultants had more of a technical background. So I found that quite interesting. And then, when I was sort of 26, getting on to 27, figured actually I'd like to learn more about this. And I tried a bit of night school, I tried a bit of Open University, and I thought, no, if I'm going to do this, I want to do this properly. And I want to be much better at my job, and I want to be able to understand this tech thing. So started applying to universities, got into Durham University. Again, somebody else took a chance on me because I still had those 2 shit A levels, but a bit of work experience. But I promised him I would show up early and I would work hard as well. So he took a chance on me there. Did a computer science degree from 27 to 30 at Durham with all the 18-year-olds. It's the hardest thing I've ever done. It's the hardest thing my brain's ever done. But I did work hard, and I got the results I deserved, which were really good. And it was just fantastic. And I think that was a massively transformational part of my life. And then came out of Durham, moved to London, went back into the IT world because I needed a job, but just got more and more dissatisfied with working with bigger companies. So changed companies a couple of times to work for smaller companies, but there's still thousands of people in these big companies. And then was a bit lost again, didn't really know what to do, but realized that I did have a brain and I liked understanding the tech side of things. So a friend of mine had gone to business school. It had done his career a load of good. So I thought, well, I can go do that. So I went to business school not knowing what I wanted to do through the other side of it, but did that, got an MBA, and it was there that I discovered venture capital. So I'd been aware a bit of the tech startups whilst I was an undergraduate, because like Twitter started, Facebook started, Gmail came out, things like that. I was listening to podcasts coming out of San Francisco. So that was kind of interesting, these little companies going from nothing to something. And then discovering venture capital was that there are these small companies that I've never heard of, and they invest little bits of money into lots of different companies. Most of those don't work out. They try to help them out here and there. And when they do work out, it can be huge. And I think that's what I wanted. I wanted to work hard. At Durham, I'd worked really, really hard. And at business school, I'd worked pretty hard. And I had this appetite to work really, really hard. But working in a company where there's thousands of people, if you work your backside off, doesn't really make a difference, because there are lots of people bobbing along in the middle, and then there's a few people not working at all, and it really doesn't make much of a difference if you're in a company of thousands. So most people just keep their head down, and I didn't want that. So then a job came up at that early stage investor, and I went for that. And there were 4 partners. There was 1 part-time member of staff, and there was me. And that was very, very different. But I loved it. I was there for 4 years. It's the best job I've ever had. Absolutely loved it. And that was aged 35, getting a job that I finally liked.
Yeah. So as an early stage investor, it's interesting because the last business I was part of, where I was a shareholder, we were owned by the Carlyle Group.
Mm-hmm.
And the Carlyle Group's focus was really around, like, within their European technology portfolio, we were one of the businesses. And talking to some of the people that owned the fund, they said, we've got 12 companies in the fund, you're one of them. And it's interesting because they kind of said similar numbers to you, which was 2 will do fantastically well, 8 might have okay growth, average growth, and 2 will fail completely. And they were really hedging their bets based on, like, the money will come from those top 2, but even real true professional investors, they don't know.
No,
They can't tell from those 12. And they, Carlyle made a significant purchase in the company I was with, and still we would have been one of the lower performers actually. they would have actually ended up losing money in our business. But because we just didn't get the growth, we couldn't get the sales, we couldn't restructure the business in the way that they wanted. So they invested when we were around 12 or 13 million, and they sold when we were around 22, something like that. And the EBITDA was high, but it still didn't get the growth that they wanted because they bought other companies at the same time. It's so interesting because it's like they went fully into it, and there was other businesses that just were just flying by the end of their 4 or 5 year journey. So like it's interesting because what you've said there, when you're looking at early stage investments, you're building a portfolio, 10 to 12 companies, something on those lines, and just trying to figure out back the right horses.
Well, I've invested in 24.
Okay.
And 6 have gone bust. One spectacularly, and I've had 4 exits and a 5th partial exit. So I've got like 14 still going.
Right.
Some doing extraordinarily well, but it's not done till it's done. Because I've seen with the exits, it can look like it's going really, really well, and you start doing the maths on how much money you're going to get out of it, but then it can go wrong. So it's never done till the money's in your bank. But those 14 that I still hold, there's some in there that are absolutely flying and really, really growing well and have a good future.
Those exits that you've been through, what is the sort of traits that those businesses had that have grown to the point where it's got a valuation for someone else to make the investment into, and those ones that have gone bust, what would you say kind of like really makes the difference between those? Something that's really working well. I mean, I know we talked about the founder. Is there something more underneath there where you think that you can see early warning signs of this is progressing nicely, or something isn't quite working?
I mean, ultimately, I don't know the word that comes into mind. Ultimately, it's about power. So they've got to be strength. They've got to be in a position of power or a position of strength. So the one that went spectacularly bust, they had one potential acquirer, and it all fell apart. And they were a high growth, loss making business, so they had to go down that route and all the rest of it. The acquirer kind of came in at a really good price, and that was all fine. But then the deal just got worse from that point on, and then the company was unable to go out and raise funding to plug the gap. And that's what happens that's what can happen when you've got one horse in the race trying to acquire you. The best exit I had, in the end, they had 4 companies bidding for them, and they didn't need any of them. So they were like in a really, really strong position. And that's the same for an exit as it is for pitching an investor. Going back to the beginning when we were talking about what good looks like to pitch an investor. I mean, it's what investors should want, but it's that the business that's pitching is incredibly powerful, incredibly strong. So they're going to do it regardless. And that's kind of what you want. And I think that's what makes the difference.
I had someone on the podcast a while ago talking around investments, and they would say they've got with or without you energy, which I really liked.
I heard that. Who said that?
I can't remember. I've got no idea. I feel like I watched the Diary of Your CEO, so it might have been in there somewhere. One of the guys, I'm sure, said, you've got with or without you energy.
Yes.
The point of that was they're doing this with you or without you, but they're doing this. Yeah. It's going to happen.
Yeah.
And it's just whether you're on the bus or not. Yeah. And if you don't take a ticket, then they're going anyway. And they said you quite often find that in real high growth businesses or something that's going to really build momentum. Mm-hmm. The founder or the team have just got such a trajectory, it's going to happen regardless.
Well, it's that. I mean, look, there's no guarantees. And like you were saying, venture capital investors are wrong way more times than they're right. And you invest in 100 companies, one is the outlier success that makes up for the 99 losses. And, very smart people have been doing this for decades, and it's still like that. It's still massively, outlier based. But yeah, there is something about when you meet the founders, and again, it's a bit intuition, it's a bit gut, it's a bit what they're doing and why they're doing it. It feels inevitable that good things are going to happen. Then yeah, that's just the best.
I was listening to Cathy Wood, funny enough, on Diary of Your CEO recently, this week or something, and it's really clear because she was talking about her thesis around how she invests, where she puts her money, those sorts of things. And I wonder if it's the sort of thing that you kind of look at as well. As she was talking about Tesla, for example, And she was describing why she's gone so all in on Tesla, or I said all in, it's about 10% of her funds. But she was saying she's investing to where the opportunity will be in the future. She's I'm not investing in their current business. She's like, I'm investing in robo-taxis and homes having robots in the future. She said that's AI for the future, which is nothing to, obviously it's what they're trying to develop, where they're trying to get to. She said, I'm investing for some white space that doesn't exist yet. When you're sort of evaluating businesses, obviously you're looking at what's the idea right now, but it's interesting because you're also trying to think about how are they going to get those first few customers in the next few years? How are they going to go on the journey? And then what's the white space that they're getting to? So you're having to sort of get a real understanding of what's the future look like, trying to predict the future.
It's really hard.
Yeah.
I don't know if I get it right. I don't know. I mean, we'll see. It takes a long time to figure out whether you got it right, because the failures come quite quickly, and then the kind of moderate exits come next. There's some acqui-hires and some moderate exits, and then some decent exits. The real mega exits don't come until quite a way after that. But again, I think it goes back. It goes back to how the founder is thinking about what they're doing, and we talked about market and market sizing and things like that early on. For me, I'm looking at people that are making up markets and making up terminology. And again, I'll not always get it right, but if the founder is congruent with the market that they're making and they can dominate that market segment, and that market segment happens to be growing, or the demand for what they're doing happens to be growing, and they can defend that, then great, that's fantastic. And they'll figure out new ways of keeping ahead and doing more. I know a couple of big Tesla investors. I don't know Kathy, but I've listened to the beginning of that podcast as well. I know two other big Tesla investors like that, and I love it. I love talking to them about it, because they just see things completely differently to how the rest of people see it. So they look at it, and a lot of people think, oh well, how can Tesla be valued so much, more than the combined combined car market or other car manufacturers? And it's like, well, it's the category they're in. They're not in car manufacturing. They're in AI, which is applicable to cars and humanoid robots and God knows what else. So again, it's like how the founding team is thinking about what market and what business they're in.
Yeah, because I think that's the interesting thing about Tesla. It's like, how do you define them? Are they a car manufacturer? Fine, if that's how you look at them. Or actually, are they the world's biggest AI company, which is what Kathy was explaining. And she was just saying, like, the direction of which this business is not what you see today. It's a completely new market which they're going to create.
Yeah.
And that's why I kind of often think about your situation, which is you're trying to predict the future.
Yeah.
Understand what a market might do, or there might be some convergence into a new market. It's fully, you're trying to predict the future. It's such a tough role.
Oh, it's brilliant. That's why it's so exciting, because these people are doing things for the first time, new things to them, new things to the world, trying to change it and make it better. And there's no guarantees it'll work. You just got to do your best and adapt as best you can and work hard on the things that matter, and try to create the future you want to see. And if I can give you one example, that's probably in my portfolio. I invested in a company called Unplugged, and it's completely non-tech. It's the reverse of tech. It's a bit like going for dinner with people. They do digital detox cabins. So they've got cabins in the countryside where two people, you can go on your own or you can go with someone else, and you go there and you book it for 3 or 4 nights, and they've got a box, and you turn off your phone, you put your phone in this little box, and you shut the lid, you put a padlock on it, and you don't touch it for 4 days. I backed them when I met them when they had no cabins at all. In early 2020, I think they'd ordered one, and then all the lockdown COVID hit, and they still had this one cabin that they'd ordered that was on the way, and they're like, oh my God. But I met the guys early then, and then invested a little while later. And their thing was, they're dominating that market, right? It's small at the minute. People that want digital detox cabins, an hour or so from major cities, that's quite a small market segment that they've got, but they've got all of it. And now they've got 40 odd cabins. They'll soon have 60 odd. They'll soon have 100. And when I spoke to them in February 2020, they're like, we think we can probably have 1,000 of these across Europe. And it's like, okay, could they do that? What happens if they do that? And also this category that they're in, this market segment that they're in, doesn't exist because no one else was specifically focusing digital detox experiences in cabins in the countryside. Will people want that? And I just sort of thought, I think they will. I think we are not putting our smartphones back in. They are not putting that technology away. So people will have to engineer ways in their life to deliberately detox themselves from that temporarily. So could they do that with Unplugged? Could Unplugged have 1,000 across Europe? Yeah, do you know what? Yeah, I think they could. So it's that kind of thinking.
Yeah, I think they're onto something. Like, especially as the world...
They've got like 90% occupancy. It's bonkers. It's amazing.
Well, the interesting thing is, it's like, in that situation, a lot of people are... I think people are very, very aware of this addiction that we have to our phones and the addiction that we have to email and the addiction we have to, Slack. Being slacked to death is a kind of a joke that we have in our world. How did Simon die? He always slacked to death. That's what happened. Where's he gone now? Oh, no, he's slacked to death. Like, just being this hyper-connected world actually makes you feel less and less connected. It's like... Yeah. And just having time, being so connected by a phone or being a screen or those sorts of things, especially now when we're all, since 2020, a lot of the world is remote working. Like, there's less connection going on than ever before in the most hyper-connected world that we've ever lived in. Yeah. And that's why I feel like what I love about this business is that, you can specifically choose a date and time for a week or a few days. And you can say, I will not be contacted.
Yep.
And you can actually have real time for you, whether it's you or someone else.
Well, that's the thing. I think after they'd had a few cabins, they would talk to their customers and they realised actually some of the ones that are a bit younger than me, if a couple had gone on one of these digital detox retreats in their cabins, they'd met on an app. Right, so they'd swiped one way or the other, whichever way it is, and they'd met there, and then they'd started going out, started dating, and then it could be years later, but they've never gone for a meal, they've never gone for a holiday, they've never done anything where their phone is out of reach, or where one of them doesn't have it, or it's in their pocket and it's buzzing. So people have grown up like that, people have started their relationships like that, and to be able, and it's not going away. You can't go back to the 90s that I remember, so you've got to engineer that in people's lives. And that's what Unplugged are creating and giving those people that opportunity. And people love it. It's quite transformational. It's
interesting because you've got to I like the word you use there, engineer, because you've got to then almost, it's a funny thing, to notify people. Because during that time you're going to get messages, and then after 2 or 3 days, if someone you haven't replied to them, which they always reply to, if you haven't made them aware,
well, you're putting out of office on. I think
search parties are. I'm thinking about family and friends as well.
Yeah, I think it's sensible to tell your nearest and dearest that you're going to go on an Unplugged. That's fine. But they'd also have, they tell the guests that go along, like, look, on day one you'll probably feel this. You'll probably feel a bit itchy and anxious, right? But you've got to push through that. And then on day 2 you'll start to feel a bit of a release, and then on day 3 you'll feel this, and then on day 4 you'll maybe want to do this again in another few months. So they kind of lay it out there for people because it is a bit weird, not touching your phone at all and having it locked in a box for 4 days.
But just being able to have the opportunity to return to self as we were supposed to be before technology. It's a great opportunity.
Yeah, but you have to deliberately do that. No one's going to do it for you.
That's what I mean.
No one's going to take away your phone. It's just not going to happen. So you've got to engineer that in your life, once a quarter, twice a year, whatever it is.
Yeah. Interesting.
Unplugged or otherwise.
Yeah.
But definitely Unplugged.
And also cool locations across Europe, all different types of locations, because I think that would be the attraction is, let's go to Switzerland and do this. Or
yeah, I think so. I mean, they're just like shipping container sized cabins, in the countryside. Pretty remote, but the early ones were, within an hour or so of London, like the first 20 odd, I think. So you could, get a train to Hertfordshire, jump off, get in a cab for 10 minutes and you'd be in your cabin, and it's like being in the middle of nowhere. Now they have, they've got one in Wales, they've got one in Spain. They're starting to look at other more remote places, but it's quite remarkable what you can do even just an hour or so outside of London or Manchester. You can be in a field and you can't see anyone for miles, and you've got your phone locked up in a box. That's almost as good as being much more remote.
Yeah, and now you're forced.
Yeah,
you're forced to get to know your partner again.
Well,
to
that's
talk
it.
and to walk and to spend quality time together.
Yeah, you get a map. You get like an old film camera. I don't know if it's a Polaroid or a sort of old clicky kind of camera. You get a big map that you can unfold. You get suggestions of a pub you can walk to. Sometimes one of them, I think it's in Wales, is next to a lake, so you can go wild swimming. I mean, it's great.
I wonder how many couples just quickly go, oh my God, we've never sat here and spoke to each other for a couple of years. Let's quickly get to the pub.
Maybe.
Yeah, interesting. Is there anything we haven't covered today from an investment perspective? Things that you're looking for, that kind of like, we've talked so much about the founder, sort of the grit, the self-awareness, the market opportunity. Is there anything else that's kind of missing there that, that's important when you're looking at businesses?
I mean, I think for me, it does come back to the founder. And I try to be helpful with 9 others, with hundreds and hundreds of people. But if I can use those patterns and eventually invest in a small number of them, then that's great, and I can see what they're about. But the business has to work. The business has to work for me, and it's that kind of define your market segment that's growing is important. I like it if it's a bit obscure. I think the other thing I sort of think about is investing in something that's obscure at seed, but it'll be obvious at IPO. And I think that's sometimes the challenge as well, is, the entrepreneurs come along and they try to make it a bit too obvious at seed. They try to make it fit into categories, or they try to make it fit into tick a few boxes. But actually, that's not where these massive outliers come from. They do have the massive outliers in the early days are a bit obscure, and they do have to make up their own terminology and their own market segment and their own way of describing things. So I think that's what I look for, and it's uncomfortable and it's difficult, but I think that's really important. And there've been a number of companies that I've backed, and a number of ones that are, we all know, that are a bit weird and a bit obscure at the early days. But then you fast forward a few years and it's like, yeah, well, of course we can dial up an Uber on our phone, or of course I want to stay in a stranger's house on Airbnb. But in the early days, they're completely weird and obscure.
Yeah, because those ideas, you don't start until they become the norm. Airbnb now seems quite normal, right? Doesn't it? But like at the very beginning, staying in a stranger's house, that is quite an odd.
They've got so many rejections as well, right? Going back to the venture capital game, it's an outlier game. Most of the investments that I make and every other good investor makes, you lose money on them, but you're only ever going to lose whatever that you put in, and hopefully the big winner will make up for all of that. And Airbnb, you can see their pitch deck, you can see their emails back and forth to investors. Some of these have been made public where they get rejected. And now we're like, oh my God, that's completely crazy. How could you reject Airbnb? But all of the best venture firms always reject an awful lot of companies that then go on to be massively successful. And that's how hard it is. And that's the kind of puzzle we're trying to solve.
Well, one of the things I loved about the Airbnb story was that they didn't set out trying to create the Airbnb business. What they did is they started out as some developers who said, right, we're going to build a startup. They kind of got themselves together, but we need some cash. So and then as part of that story, the way I've understood it is that they had some rooms which they then decided to let out for a weekend convention to make some money. And then the weekend convention came and they were like, well, how do we create something quickly so therefore we can make some money from these rooms? Anyway, so they let their own rooms out to support this convention, and they realised suddenly they'd made some money. Not a lot, but just something.
Yeah.
And they thought, I wonder if this is a thing. But that wasn't what they kind of all got together to do in the first place.
Yeah, it's kind of, some of these things are accidental, because if it was obvious early, someone would have done it already, I guess.
Yeah. And it's interesting how you can discover the best ideas by complete accident.
Yeah, absolutely. It's brilliant.
It's been a wonderful experience talking to you today. So thank you so much for your time.
Thank you. Thanks for chatting.
If someone wants to find out more about you, where do you sort of hang out? LinkedIn, or and wants to get in contact? What's the best way of communicating?
Yeah, I'm on LinkedIn. I don't like LinkedIn. I deleted it for a year, but I'm on there if that's what people like. I try to respond. I still, for all its faults, I still like Twitter. So I'm at @mstafford on Twitter, and you can find my links from there.
Fantastic. All right. Thanks a lot for your time today.
Thank you.